Good morning. I call this hearing to order. I would like to start by thanking the witnesses, especially the small business owners who have traveled here from different parts of the country for being here today. Being a small business owner in America is a tough job. No matter what your business, you must wear many different hats. In addition to doing what you went into business for in the first place, you probably have to tackle responsibilities as a tax accountant, advertising executive, regulations expert, fundraiser, and human resources expert as well. Yet throughout history, entrepreneurs in America have done all these things and more. One of the things that is critical for small businesses owners is finding, attracting, and retaining qualified employees. To find success in today's global economy, companies know that creative, adaptable, and engaged employees are a critical asset. And while recent surveys show that Americans hold small businesses in high esteem at a rate of 3 times higher than big businesses, small firms still have to aggressively compete with firms of all sizes to fill out their rosters. To win this war for talent, firms know that they must become employers of choice, so that their organizations can bring together the best individuals to work on the challenges and opportunities of a new and ever-changing economy. Increasingly, these small businesses have expanded the traditional benefits they offer prospective employees in the face of greater competition for talent. We've had small firms testify before our committee in the past that offer new benefits that small firms wouldn't traditionally offer, such as flex time packages with greater work-home balance, wellness programs with financial incentives, or bonuses with stock options and profit-sharing arrangements. But the competition isn't always fair. Sometimes small business owners' ability to compete for talented employees can be hindered by federal regulatory or statutory action, or in some cases, inaction. One area in particular importance is tax policy. Most small businesses find it difficult to stay current on tax laws because so many tax provisions are temporary, effective only for a few years or even months, and regularly extended. These provisions, commonly referred to as tax extenders, leave small business owners guessing about their tax liabilities each year. This is in contrast to large firms that often have tax attorneys and accountants on staff to help them get a better grasp of their tax liability in any given year. While they dislike the uncertainty the extenders provide, most small firms welcome the extension of these provisions because they result in lower tax bills and provide opportunities for them to invest in their businesses. Among the most popular are bonus depreciation, Section 179, expensing, and the research and experimentation tax credit. I suspect that our witnesses today will give us ideas as to what they would like to see in the extenders package. I'm looking forward to hearing your thoughts. Again, I want to thank all of you for taking the time to testify before us today. I now yield to our ranking member, Ms. Chu, for her opening statement.
Thank you, Mr. Chair, and thank you all for being here today. As we approach another last-minute extension of various tax provisions, it's critical that we continue our efforts to strengthen small business by putting certainty back into our tax code. We all know that failure to take any action creates greater uncertainty and in the end hurts our small businesses who provide 2 out of every 3 new net jobs in our country. This hearing today will give the committee the opportunity to examine just how useful tax extenders are to small business and why their temporary nature creates great challenges. Section 179 expensing remains one of the most essential tax provisions for small employers in all industries. It's an invaluable tool which provides benefits to small firms by giving them bigger, immediate write-offs, reduced paperwork, and money to invest back into their businesses. It also serves as a spark to the economy as money saved now is injected back into the marketplace. While small businesses primarily utilize and benefit from the enhanced Section 179 expensing provisions, several other extender provisions are critical to small firms. One such incentive is the Research and Experimentation Credit, the R&D credit. Although this tax credit is a source of frustration for many taxpayers due to its temporary status and complex rules, it has reduced business costs for new research by as much as 7%. But most importantly, over 70% of the benefits from the credit are attributable to high-paying, domestic, research-based job salaries. With the end of the year fast approaching, The nation's fiscal health is on the minds of many Americans, especially small business owners. And as a member of this committee, I'm well aware of the challenges created by the Internal Revenue Code and the major obstacles that uncertainty has on business growth. We cannot pass another retroactive extension that applies only to the 2015 tax year. This singular focus does not help our nation's job creators. Instead, it hinders their ability to plan for the future and harms the overall economy. We depend on these businesses to spur economic growth by expanding operations, but they cannot do this without existing tax incentives they've come to rely on. These provisions are critical for small businesses, and it's also critical that we implement these extensions in fiscally responsible manners. The primary way to achieve this goal is through comprehensive tax reform. Long-term reforms will encourage small entities to make purchases now and in years to come. Providing this certainty helps put money back in the pockets to invest and hire now. I'd like to thank the witnesses for their participation today, and I look forward to their testimony. I yield back.
If committee members have an opening statement prepared, I ask that they be submitted for the record. I'd like to take a moment to explain the timing limits for you. You will each have 5 minutes to deliver your testimony. The light will start out as green. When you have 1 minute remaining, the light will turn yellow. Finally, at the end of your 5 minutes, it will turn red. I ask that you try to adhere to the time limit. And with that said, now I'll introduce the witnesses. I'll do all of you, and then I'll let the ranking member introduce her witness. Our first witness is Jason Duff, founder and CEO of Bell Fountain, Ohio Properties, a development firm that purchases and remodels storefront buildings in Bell Fountain, Ohio. The firm then works to attract, recruit, and start new businesses in the community. In addition to his real estate business, Jason is also a third-generation business owner working for his family-owned enterprise, Ohio Ready Mix. He is a regular advice contributor to Inc., Forbes, and Entrepreneur magazines, and is testifying on behalf of the Small Business Entrepreneurship Council. Thank you for being with us today, Mr. Duff. Up next will be Todd Kriegel, CEO of Global Precision Parts Incorporated, or GPP. A family-owned business, GPP has 3 locations in the Midwest with approximately 200 team members. The company sells into the automotive light truck, plumbing, heavy truck, HVAC, tube fabrication, hydraulic, and munitions industries. Testifying on behalf of the Precision Machine Products Association, Todd serves on their Government Affairs Committee and Board of Directors. We appreciate your participation today, Mr. Kriegel. Our next witness is Rich Chevelle, president of Chevelle & Company, a CPA and consultation firm based in South Florida. The company serves contractors of all sizes with financial statement, tax, and consulting services. Rich is a longtime member of the Associated Builders and Contractors, where he has served as chair of their National Tax Advisory Group and chair of the Legislative Committee of ABC's Florida's East Coast chapter. He has also served as chair of the Construction Financial Management Association, National Tax and Legislative Affairs Committee. He is testifying on behalf of the Associated Builders and Contractors today. Thank you again, Mr. Chevelle. I yield to Ms. Chu for the introduction of Mr. Nichols.
It's my pleasure to introduce Mr. Thomas Nichols, an attorney and partner at Meisner, Tierney, Fisher & Nichols. This firm is over 160 years old and the second oldest firm in Wisconsin. Mr. Nichols also serves as the chairman of the Board of Advisors of the S Corporation Association and recently served as chair of the S Corporations Committee of the ABA section of taxation. Mr. Nichols, thank you for joining us today.
I now yield 5 minutes to Mr. Duff for your opening statement.
Good morning, Chairman Kelly, Ranking Member Chu, and members of the subcommittee. Thank you for the invitation to provide testimony today on the important issue of strengthening the nation's small businesses. My name is Jason Duff, founder and CEO of Bell Fountain, Ohio Properties. I'm a third-generation family business owner and have founded several companies of my own. I started my first business when I was 8 years old selling candy bars. In my earlier years, I have also sold custom greeting cards, made-to-fit shoes, stamps, coins, and even Beanie Babies. Bell Fountain, Ohio Properties purchases and remodels storefront buildings on Main Street. We attract, recruit, and start new businesses in our community. To date, I have purchased and renovated 14 different historic buildings in our downtown. My passion is to build and grow smart, vibrant, and entrepreneurial communities. Bellefontaine, Ohio now has a multitude of diverse stores and businesses due to the revitalization efforts. These businesses are a gourmet pizza shop, bakery, hair salon, CrossFit gym, several new antique stores, and a brew pub. All of these have helped create our downtown having life and vibrancy. Construction has also begun on 8 new loft apartments on the 2nd story of our buildings. Bellefontaine is an area that other communities are taking notice of in terms of our approaches and best practices to restoration. I'm proud to say that our work in Bellefontaine has all been accomplished in the past 4 years. While growing assets on our balance sheet is important, I find that our greatest asset in my company is our employees. So recruiting and hiring talented employees is a very important piece of our success. On this front, I must compete with businesses of all sizes to find talented employees I need to operate effectively and productively. I am committed to building a team of people who love their community and allow my employees flex time to run and serve in public office, volunteer with local service organizations like Rotary and Kiwanis, and have the time they need to successfully raise their families. Providing employees with key benefits like workplace flexibility truly make us and other small business an employer of choice. Small businesses play a crucial role in the vitality of job growth in a local community like Bellefontaine. When we are healthy and growing, we are providing consistent quality and skilled job opportunities. When we invest in renovating commercial storefront, for example, we hire local carpenters, plumbers, and electricians. Many of our renovation projects have contributed to the direct job growth in local trades. We also work with these local companies in purchasing cabinetry, flooring, and light fixtures. These investments in hiring local businesses equate to new tax dollars that benefit our municipalities, our schools, and our service organizations. As you're aware, the key tax measure like enhanced Section 179 expensing and bonus depreciation that are part of the tax extenders have expired and were only made retroactive very late in 2014 for that year. For 2015, businesses like mine have been planning and operating under the outdated Section 179 expensing level of $25,000. The uncertainty of bonus depreciation also affects my investment decisions. Bonus depreciation is a benefit that has influenced smart decisions for my business. I have purchased new equipment versus used equipment because of bonus depreciation, and that new equipment is more efficient, reliable, and cost-effective in the long term. I believe that these investment incentives are making a positive impact in keeping small businesses competitive. With a stable and enhanced 179 provision and certainty on bonus depreciation, I am able to invest more capital in projects. Again, these projects start new small businesses that in turn provide valuable contributions to my community. These new businesses create jobs, increase property values, and grow local revenues. Here is my basic advice for government to work better and smarter for small business owners and encourage entrepreneurship. Make permanent the incentives. Making permanent the more robust levels of the Section 179 expensing, as well as bonus depreciation, will provide small businesses with practical and needed tools to grow, invest, and work harder. The type of stability and certainty is critically important. Make the tax code simpler. Simplifying the tax code would reduce complexity and cost for entrepreneurs. The more time and money we have to invest in our businesses, the stronger enterprises will become. Be clear, provide clarity to small business owners. Give us an opportunity to know and understand the rules so that we can plan and play by them for the future. Provide clear instructions so we can focus on the growth of our businesses and invest with confidence. And make a long-term commitment. Businesses forecast and plan far into the future. A smart tax code would mirror effective business planning. Investment thrives when it is encouraged, when there is certainty. Thank you for the opportunity to share my experiences and my views with you today. It is truly an honor to be able to do so, and I look forward to your questions and discussion.
Thank you, Mr. Duff. And now I recognize Mr. Kriegel for his opening statement.
Good morning. Thank you for allowing me to testify today. My name is Todd Kriegel. I am the CEO of Global Precision Parts, otherwise known as GPP, a family-owned business with 80 employees in Indiana and 120 employees split between 2 facilities in Ohio. I am here today to underscore the importance of small business manufacturing in America. and call on Congress to make permanent key tax provisions which fuel our economy. We founded GPP in 1989 as a privately held family business. I increasingly think about what the future holds for my 3 children, manufacturing, and employees working in our facilities. Instability in the tax code prevents manufacturers from planning investment, hiring more workers, and purchasing new equipment, especially for small businesses and industries with razor-thin profit margins. In the real world, we cannot simply assume Congress will retroactively extend business investment provisions and spend money we may not have at the end of the year. I'm a member of the Precision Machine Products Association, whose members flew to Washington this week to personally stress the importance of addressing these expired tax provisions. To prepare for our visit to Capitol Hill, PMPA conducted a quick survey of its members on which tax provisions they use to compete globally. Respondents averaged 60 employees, similar to our facilities in Ohio and Indiana, yet despite being small businesses, they invest heavily in capital equipment, expecting to spend on average $552,000 in 2015. Most machines for our industry start at $250,000 and can exceed $2.5 million. At Global Precision Parts, to maintain a competitive edge, we continuously buy new equipment, spending roughly $2 million each year. Because of our capital investments, bonus depreciation is by far most important to us. In 2014, it saved our company $151,000, money we used to hire more employees and purchase additional equipment. In the precision manufacturing industry, not only is our equipment expensive and heavy, it takes time to place into service, often 8 weeks to 18 months. Congress extending the expired provisions on December 11th does little for a small business who cannot finance, purchase, and place into service a 10-ton machine by December 31st when the provision expires again. There is a misleading impression among some in Washington that bonus costs the federal government money and lost revenue. However, the government does receive the revenue over the life of the equipment, but the provision provides smaller companies like ours an immediate discount on the price of the new machine we could not otherwise afford. The survey also showed the typical precision parts manufacturer claimed nearly $370,000 in Section 179 equipment expensing for 2014. When Congress fails to extend this key tax provision, small businesses have a major hole to fill in their budget. This means we will cut our current year spending on new equipment and often suspend investment for the coming year. Remember, lower machine orders by companies like mine means fewer workers are hired and less tax revenue is collected throughout the supply chain. Inside the Beltway, you may not feel the ripple effects of your inaction, but in the real world, we certainly do. When we don't know what the future holds, businesses like bankers spend less, take fewer risks, and reduce or stop hiring altogether. As a responsible business owner, I have to find a way to cover that $150,000 gap Congress created for our company if bonus depreciation remains expired. According to our association survey, dysfunction in Washington would cost the average small manufacturer $600,000 if bonus depreciation, Section 179, and the R&D tax credit remain expired. Who is going to cover this $600,000 tab Congress unnecessarily created? This is why we need comprehensive tax reform for all businesses. C corporations are pass-throughs, large and small, family-owned or publicly traded. Like most family-owned companies, we are a pass-through, meaning we pay taxes at the much higher individual rate, which for us was 39.4% last year. If Congress lowers the tax rate only for C corporations, Washington will leave behind millions of small manufacturers like us to pay the higher taxes. Making the expired provisions permanent and tackling comprehensive tax reform is not about paying fewer taxes. GPP's effective tax rate increased by over 11% between 2008 and 2014, sending hundreds of thousands of dollars to Washington rather than putting it in workers' pockets. Yes, I said workers' pockets because at GPP last year we reinvested 71% of our profits back into the business. Uncertainty surrounding the few tax provisions intended to encourage manufacturing in America is a self-inflicted drag on growth. I believe that small businesses can continue driving the economy. However, Congress must make permanent bonus depreciation, Section 179 equipment expensing, and the R&D tax credit to allow small businesses to invest and plan for the future. Thank you for allowing me the opportunity to testify before you today on this important issue.
Thank you for your testimony, Mr. Kriegel. We have House votes on the House floor, so we will adjourn for about 45 minutes and then have the next two witnesses and reconvene after the votes. Okay, we'll reconvene at this time, and with that said, we now ask for the opening statement of Mr. Chevelle.
Thank you. My name is Rich Chevelle, testifying on behalf of Associated Builders and Contractors, National Construction Industry Trades Association, with 70 chapters representing 21,000 members. I am president of Chevelle & Company, a full-service CPA and consulting firm that focuses on services to closely held commercial contractors. The subject of this hearing is very appropriate, as small business is, in fact, the employer of choice for the average American, not only within the commercial construction industry, but throughout the U.S. economy. Small businesses, and particularly small contractors, are excellent employers for several reasons. First, there is plenty of work in commercial construction because we are facing a severe labor shortage. Secondly, training is available for new workers to the industry. According to the ABC Institute in South Florida, the value of being a graduated registered apprentice is worth $300,000 additional dollars during the career of the typical worker. Moreover, the construction industry fosters the realization of the American dream. Through effort and determination, many construction workers find themselves picking up small jobs, working them with their peers after hours and on weekends. Anecdotal evidence suggests that seasoned workers can earn significant amounts of money this way until they are ready to leave their regular position to pursue their own businesses on a full-time basis. The single biggest challenge facing small business today is widespread uncertainty, and specifically, uncertain federal tax policies are chipping away at these small businesses' ability to effectively operate. From my perspective, there are two main tax issues. First, Congress must do its job and pass tax legislation to stabilize the tax environment. The continual expiration of effective dates for tax incentives and other tax provisions included in the annual extenders bill hurts the business community and particularly the small business. Right now, as we're approaching the end of the year, contractors have to project and plan for their 2015 tax liabilities. Yet it is unknown whether the tax extenders will even be in the law. Second, for commercial contractors, Congress should finally rectify certain tax provisions that are hurting these small contractors. In 1986, Congress passed legislation that was intended to curb abuses by aerospace and defense contractors and how these large businesses, utilize the completed contract method. The required use of the percentage of completion method was forced upon all businesses who perform work under long-term contracts. To address this burden, the small contractor exception was put in place in 1986 with a $10 million revenue threshold. Almost 30 years later, that threshold has never been updated. For comparison, Small Business Administration currently utilizes a threshold of $36.5 million. We continue to ask Congress to do three things to address this. First, update the small contractor threshold from $10 million to $40 million. Second, index the threshold going forward. And thirdly, eliminate the Section 56A3 add-back requirement for alternative minimum tax purposes, for AMT tax purposes. This third item would eliminate the requirement that is currently law that revenues from long-term contracts be reported under the percentage of completion method solely for AMT purposes. So even though they have the small contractor exception, they still have to use percentage of completion solely for AMT. And a further horrific result is that the small contractor today is required to go through complex computations under the look-back method solely for AMT purposes. By eliminating this AMT adjustment, this ridiculous look-back requirement would be eliminated for so many small businesses. In summary, Congress must do its job by adding permanency to the tax system and thereby provide certainty for small businesses, including contractors. Moreover, it is time for Congress to rectify the wrong that was done in 1986, whereby commercial contractors are still saddled with complex tax requirements that were not even intended to impact them. It's time to make that right. Thank you.
At this time, I'd like to recognize our chairman, Mr. Chabot, who's now shown up for the entire committee. And with that said, I now yield to our ranking member, Ms. Chu, for the introduction of our next witness.
Well, I did introduce him earlier, yeah. But I hope that you can just testify now.
I'm sorry. Mr. Nichols, at this time, if you'll give us your opening statement.
Thank you very much. Chairman Kelly, Chairman Chabot, Ranking Member Chu, thank you very much for asking me to testify today. I'm a member and past chair of the ABA Tax Sections Committee on S Corporations, and I'm currently chairman of the Board of Advisors of the S Corporation Association. I've been representing closely held businesses since 1979. There are many issues that divide members of Congress, but fortunately the role of Main Street businesses play in creating jobs is not one of them. Everybody understands that closely held businesses create most of the new jobs and employ the majority of the private sector workforce. What's less known is the role of startup businesses in this success. As the Kaufman Foundation has made clear, without startups, there would simply be no net new job creation. We need startups to grow the jobs base. The challenge for policymakers is that business startup activity has declined sharply in recent years. To help reverse this trend, there are a number of bipartisan steps that Congress could take to ensure these businesses resume their critical role as a source of jobs, innovation, and growth. I'll briefly describe 4 of them. First, Congress needs to stop retroactively adopting the so-called extenders. Many of these provisions are of critical importance to small business, and their retroactive adoption at the end of the year creates unnecessary hardship for business owners. For example, I've spent considerable time over the past several years answering the question of whether the 5-year or the 10-year recognition period for built-in gains tax will apply. The only response I could give is that it will probably be 5 years, but that clients can't count on it. This has created a number of difficulties. Several of my farming clients, for example, wanted to sell while farmland prices were at their peak. Unfortunately, those in the critical 6 to 10 year limbo period were unable to commit to a sale absent congressional action, and now it appears that the optimal time for selling may be gone. This makes no sense. Built-in gains relief and other business extender provisions are clearly good policy and should be made permanent. A second unforced error is Section 409 Cap A. It imposes rigid guidelines for deferred compensation plan, violation of which triggers substantial penalties on employees, even though the corresponding tax deduction to their employers has also been deferred. Section 409A creates an unnecessary impediment to offering employees deferred benefits. In our practice, we have had to restate phantom stock plan documents in order to comply with these new rules, while some of our clients have simply decided to forego offering deferred compensation at all. This provision represents such poor policy that the full American Bar Association tax section has come out against it. Third, the Affordable Care Act is being implemented in a way that has serious negative consequences for even employers with less than 50 employees. The IRS has taken the questionable position that the HRAs and other employer plans that reimburse individual policies somehow run afoul of the market reform provisions of the ACA. This contorted position is particularly burdensome for small, closely held businesses. One client had a longstanding HRA that provided generous reimbursement for premiums and on health insurance policies selected by the individual employees. His employees liked the plan, and so did he, but they just couldn't keep it. In fact, I understand that the NFIB has estimated that 16% of small businesses are in violation of this provision. The penalties for running afoul of this questionable position are draconian. A small employer with only 10 employees could face a penalty of $365,000 in any given year. There is bipartisan legislation to correct this interpretation, and I urge you to accelerate the passage of this bill, perhaps as part of the extenders legislation. Fourth, the IRS has adopted comprehensive regulations relating to the capitalization of capital expenditures, including a safe harbor for expenditures of $5,000 or less. This is good policy, but it only applies to taxpayers who have so-called applicable financial statements, such as those required by the SEC. Entities that do not have these statements get a much lower standard of just $500. That includes many, many closely held businesses. This unfairness should be corrected as part of the upcoming extender package as well. These are just 4 areas where Congress could act in a bipartisan way to help Main Street businesses create and maintain good jobs. Once again, I would like to thank the committee for holding the hearing and inviting me to testify. We sincerely appreciate all your efforts to fix these and other unnecessary burdens small businesses face.
At this time, I recognize myself for 5 minutes to ask questions to the panel. During the past 6 years or so, the number of business deaths has outpaced the number of business formation, and we've discussed that quite a lot in our committee this year. In other words, more businesses are failing each year than are being created. This is a big problem. Do any of you feel that the increasingly complicated nature of the tax code has played a role in the number of business deaths that we've seen in recent years?
Entrepreneurs inherently are risk takers. They're people that believe or have ideas and they want to go out to the marketplace and try to solve that problem. But as regulations increase, as things become more confusing and difficult to understand, their ability to stomach that risk is challenged. And at some point I see in my work on Main Street, some people just throw their hands up and give up. I believe by us working to make some of these provisions permanent, specifically the Section 179 deduction, it gives businesses that certainty so they can plan and they can speak and inspire other entrepreneurs to take a leadership role in opening new businesses.
Anyone else?
Certainly.
Mr. Nichols.
There's no question that the complexity and even the delayed complexity where they're balancing not only the issue of a very complicated set of rules, but also whether or not those rules will apply and how they will apply. There's no question that it has a dampening effect. It's the equivalent of being told you might have cancer. Yes, technically you can do everything you could have done before, but at the end of the day, if you don't really know, and it's going to slow down your long-term thinking.
Mr. Kriegel, you talked a little bit about the nexus of access to financing and tax liability in your written testimony. Could you talk a little more about the interplay between certainty in the tax code and assessing financing and capital you need in your line of business?
Sure, I'd be happy to. Yeah, so obviously you complete budgets that are 5 or 10 years out, so that you know what your expenses are going to be. With these tax extenders, not knowing at the end of the year whether we're going to have to fill a $150,000 or $250,000 hole, those are dollars that we necessarily don't have laying around. So in my opinion, that just, for future years, that minimizes the investments that you're going to make, and you got to readjust your budget constantly.
Thank you. And Mr. Duff, if there were to be an extenders package passed next week, could you realistically take advantage and make a snap decision, get something ordered, delivered, and installed in time to get the tax break?
When we pass laws that retroactively impact the previous year in such a short time frame, it makes it very difficult to be able to plan and make intelligent decisions. The work that we do in purchasing buildings that have been vacant for 30 years and recruiting new businesses to occupy and fill them, there's a lot of equipment and needs that need to be purchased, but there's a lot of planning that has to happen. So making sure that we provide provisions that are clear and give us a runway to plan throughout the future would help relieve some of those problems.
Thank you. And Mr. Chevelle, in the past, we've had witnesses that have said that some small business tax incentives, such as the small business health care tax credit established in Obamacare, are not worth the time. Have you found this to be the case when working with small firms? And how does this contrast provisions like Section 179 or bonus depreciation?
Well, there's a lot in these extenders, and some of them are small, but some of them are important too. And not just to the commercial contractors that we represent, but also to the families of the workers. I mean, you start right at the top of the list there, and you see the deduction for state and local. State taxes, very important to everybody in Florida, where we don't have a state income tax. I have clients whose spouses are teachers. They look for that small amount every year as an adjustment. The other bigger items that have been mentioned here already, Section 179, bonus depreciation, things like that are very important to small businesses. Anybody who's paying a little more tax than they should have, they don't like it, whether it's a small item or a big item. But let me give you an example of that Section 179 where this is really important this year. I have a particular client who purchased equipment last year, 2014. He purchased to the max, but because of other requirements in the code, he couldn't get the entire benefit. So he has a carryover, 6-digit carryover of Section 179 deduction that we let carry over because we anticipated income in this year, in 2015. He is now faced with a $25,000 threshold, and that's incongruent with the intent. He did what was expected. He utilized the incentive in 2014. He may not get the full benefit in 2015. We're going to have to relook at that.
Thank you very much. My time's expired. I'll recognize the ranking member, Ms. Chu.
Thank you, Mr. Chair. I'd like to address this to anyone on the panel, but starting with Mr. Nichols. Of course, one of this committee's goals is providing business owners with certainty when it comes to taxes. We've talked about the problems of retroactivity and lack of permanency, but what if Congress doesn't reach a deal on tax extenders at all this month? Can you talk about how this would affect your business's decisions to expand, hire workers, or make business investments?
There obviously, as I indicated earlier, it has an unavoidable consequence, and the uncertainty alone has a huge impact. And there are clearly many businesses that have, since these things have been extended over the years, there are many businesses that frankly have gone forward on the assumption that they will in fact be extended. There are other situations, for example, the built-in gains tax. I've got a client literally this year that I had said to him, well, if you sell your business toward retirement, if you sell your business, the built-in gains tax will probably be 5 years. He's in that limbo period. And I'm communicating with him, and I say, but what I would do is I would get all the paperwork ready to go, but why don't you wait until the extenders package gets passed? Well, and I got kind of a heartbreaking email back from him saying, well, I can't wait. I've got health problems. I won't be able to do that. Well, these are very real situations, and the lack of certainty, and especially in a context like that where they really do have to make a decision. They cannot delay. They're critical for small business.
Yeah.
In business, there are so many uncertainties. Foreign competition, healthcare costs, trained, skilled workers. Taxes should not be an uncertainty. We should know what our tax liability is going to be.
Anybody else? Mr. Chevelle.
Well, the question I get this time of year, every day of the week almost, because we're doing tax planning for our contractor clients, is what's going to happen. So they want to know, and they in essence are forced to witness something unusual. As just mentioned, there should be some certainty, yet I'm in a position where I have to show somebody, hey, look, based on what you spent this year and the potential for extenders, your liability would be this, versus here's what it's going to be if Congress doesn't do their job. That's that level of uncertainty, to look at your cash flow impact and realize, because there's two parts to tax planning, not just knowing what the number is, but when are you going to pay it? So there's an impact as to whether or not there's going to be some withholding on a bonus, whether there's going to be a fourth quarter estimated coupon in January 15th, or a larger balance due at April 15th. This impacts daily cash flow, this uncertainty, and it's really unfortunate.
Okay. Mr. Nichols, anytime we consider renewing tax incentives, one of the driving principles is cost. Two of the most expensive provisions are the ones small businesses rely on the most, Section 179 and the R&D credit. What role should budget neutrality play in our efforts to extend these tax incentives permanently?
There, I would, that's an area I'm stumbling a little bit, because that's an area obviously that you are more, Congress is more on the front lines in terms of making those decisions. But the budget neutrality obviously is important, but unfortunately, budget neutrality can have some negative impacts sometimes. Sometimes, in order to achieve budget neutrality, there are other provisions that are put in place to offset the budget cost of particularly good provisions. And I would submit that, like 409 Cap A would be one of those provisions that I think may have been put in to offset what was otherwise a good provision. But 409 Cap A, frankly, was bad policy to begin with, even though it may have purported to have raised revenue. At the end of the day, it hurt maybe as much as whatever it was that it was justifying getting into the code.
Mr. Chevelle, small firms often have the fewest resources to spend on accountants to identify potential tax breaks. And there are individuals and businesses that spend 6.1 billion hours a year complying with these filing requirements. How does a continuing debate about how to extend tax provisions create advantages for firms that can devote those resources to monitoring tax modifications?
Well, tax compliance, as you point out, ridiculous number of hours, and there's provisions in there that are difficult. And yes, smaller companies have a great deal of difficulty complying with some of the rules. Larger firms are going to have internal counsel in a lot of cases. They're going to have more accountants on staff who are specialized in various areas, so they can take care of those things. In the construction industry, when you talk about complexity, one of the things I mentioned in my testimony, this look-back method that affects all contractors performing long-term contracts, the amount of work and time that's required to comply is incredibly difficult. We've had conversations with the IRS, and folks at the IRS don't like this provision any more than the industry does. It's something that for quite a long time needs to be removed. This look-back method, which requires taxpayers to go back and look at their contracts on a hypothetical basis. So you're looking back a year on a hypothetical basis, recomputing what the tax would have been if you did not use estimates, then compute a
If you can wrap it up pretty quick, we're past our time.
So these rules are incredibly complex. Sure, larger companies are going to have a little more resources.
Thank you. I yield back.
I now recognize the chairman, Chairman Chabot, for 5 minutes.
Thank you very much, Mr. Chairman. Just a couple of questions. In order of their value to small businesses, and I'd ask each of the panel members if they'd like to weigh on this, which of the various so-called tax extenders do you believe are the most important, and would you most strongly encourage us to extend? And maybe we'll start at this end here, if that's okay.
Thank you. The work that I do in purchasing vacant buildings and reinvesting and recruiting new businesses to occupy them, it's very capital intensive for the types of equipment that we have to purchase. So the Section 179 provisions are extremely essential for us to continue to purchase and buy additional equipment. And the same goes with having access to bonus depreciation. Those monies keep more working capital in our business so we can actually grow our footprint and making a larger impact in our community.
Thank you. Yes, Mr. Kriegel?
Thank you. Companies in our industry invest significant capital. $250,000 is kind of a minimum threshold. So from our standpoint, bonus and Section 179 are very important. R&D is important too. So really, from our perspective, all three are very important.
Okay, thank you. Mr. Chevelle?
Well, for commercial contractors, I would say there's three categories. The first category is discussed is 179 and bonus. But past that, there are incentives, other depreciation rules that are very helpful because they induce investment. So you have the 15-year expensing on real property costs. You have Section 179D, which is an energy deduction that's available to certain parties, whether it's the owner of the property or in some cases it's actually the contractor or designer. So that's very important. Then thirdly, you have some labor-related items, the empowerment zone credits, which are pegged to wage rates as far as how much of a credit you're going to get, and also the work opportunity tax credit. That's the old targeted jobs tax credit. So those are all valuable to commercial contractors. As far as the order goes, I would have to argue 179 and bonus are at the top, just like everybody else.
Okay, thank you. Mr. Nichols.
And I'm going to agree with everybody and repeat 179 and bonus. Part of, in answer to your question, I'm thinking in terms of how many people are impacted and the importance of the policy 179 and bonus. For reasons set forth in more detail in my written testimony, I don't think 179 and bonus are even a tax expenditure. I think it is choosing the right time to tax individuals and tax businesses when they actually are getting income from the capital that they've been spending. I would then, as far as having a priority after those items, there you're balancing how serious of a disruption it is to the individual taxpayer versus how many people it affects. I would probably throw the built-in gains tax next, only because even though it affects, the 5-year period only affects a relatively small number of people, the pretty dramatic impact that a forced double tax built-in gains tax has for an individual owner who's trying to sell their business on retirement or something like that, I would probably throw that in there too. And then another one that has been mentioned, and that is the qualified restaurant and retail property and things like that. There again, it's not as important because it doesn't affect a broad cross-section, but for the people that it does affect, the difference between having a 15-year recovery period versus having a 39-year recovery period is huge and can have, a very dramatic impact on individual real living businesses. So.
Thank you. I've, for years now, talked to I've been on this committee for about 20 years and have talked to an awful lot of small business districts in the past in my district, but now being chair of the full committee, talking to folks from all over the country. And the one word that I always heard over and over was uncertainty was the biggest concern that they had, and that's what comes out of Washington. Does anybody, and I've only got a half a minute left, does anybody have a real world example of how this kind of uncertainty on these extenders or any other tax items has really adversely impacted, or we could have done much better on something if we'd have just gotten it done up here? Anybody got anything in particular that they'd like to bring before the committee?
I just say
Yes.
we have empty buildings in our community that people do want to take risks. They want to invest in them, but they're uncertain. There's enough uncertainties in the world, and the tax consequence of knowing if this is a smart move or not is causing them to not move forward with taking that risk.
Okay, thank you.
May
yes,
I?
Mr. Chevelle? Yes.
I have
Mr. Chairman.
a real world example.
Okay.
We were engaged to do a Section 179D analysis for a client who has a hotel property. We started the study. We took a retainer. The client pointed out that it's not in the law yet because we're waiting for extenders. I'm sitting with a retainer. We finished the project, and the arrangement that was made was that, well, if it doesn't pass, we're going to give her back the retainer. And if it does pass, they're going to pay us the second piece. But the engineer that we used, he has yet to get paid, yet he's done all the work. That's a real-life example of dollars now sitting in a bank waiting to go to the service providers, and a client who does not know whether they're going to get that accelerated deduction.
Thank you. I yield back, Mr. Chairman.
The gentleman's time expired. Thank you, Mr. Chairman. I next recognize for 5 minutes Ms. Radewagen.
Thank you, Mr. Chairman. I want to welcome the entire panel here today. My question is specific to my home district. I'm familiar with the 30A style tax credits and the American Samoa Economic Development Credit. Are you aware of any other tax credits specific for U.S. territories? And if so, which of these would provide the biggest benefit for the territories? Okay, can you elaborate on how important these credits are for economic stability in these territories? For example, these tax credits are one of the major reasons our tuna canneries are able to operate in American Samoa. So therefore, these tax credits provide my islands employment.
I grew up in a small town in a rural community, so I understand that a lot of agriculture is a big thing in the middle of Ohio. And for farm families, being able to invest and purchase a combine or tractor may be the largest expense that they make. By having certainty and knowing when you're making that investment, that large piece of equipment, you'll be able to grow that family business and maybe extend that or pass that on to siblings and see multi-generations of hard work actually pay off. And I think that's the American dream, and these tax credits help people achieve that.
Thank you very much. I'd appreciate if I could get a little information on my earlier question, if that's possible. Thank you, Mr. Chairman. I yield back.
Thank you. The gentlewoman yielded her time back. In closing, again, I want to thank each of you witnesses for being with us. All of you provided excellent testimony, both orally and in writing, and I appreciate that. As this Congress progresses, my colleagues and I on the Committee on Small Business will continue to work to simplify the tax code and provide small business owners the certainty they need to focus on growing their businesses instead of guessing what their tax liability will be in the coming year. In the meantime, we will share what you have shared with us today with members of the House Ways and Means Committee to help them craft a thoughtful and robust tax extenders package. I ask unanimous consent that members have 5 legislative days to submit statements and supporting materials for the record. Without objection, so ordered. This hearing is now adjourned.